Property Pros, where we make sense of the property world. I am Jacque Elias, Director, CEO of Futurebound, and I am here today with Simon Moor. He is Managing Partner of Rival Accounting. He's an accountant.
Yay.
So I have Simon here today so we can learn a little bit more about how accountants fit into the property world. You know, it's not really first home buyers that need an accountant, right?
It can be.
Can be, okay.
Yeah, if you got other business interests, but mainly it's property investors, yeah.
Okay, so property investors. And how do accountants fit into that with property investing?
I think there's really two main parts, Jackie. Firstly, there's the compliance side, so that's getting your tax returns completed, and maybe financial statements if you're investing through a company or a trust. The other part, I think, is more the value add. I think accountants can really add, and a lot of them don't, is around, have you got the right structure? Have you got the property in the right entity? And what are your plans for future property investment? Are you going to buy one? Are you going to buy multiple properties? Really important to know to get the structure right from the start. I think yield's important too. So a lot of people will go into property investment thinking, oh, I'll just buy one, I'll buy the next one, it's all going to be okay. But it's really important to look at, are you investing in properties that are cash flow positive? Are you looking for capital gain? It's really about having that investment strategy right from the start to understand what you're looking for. And often people just sort of buy one property then buy the next one. It's all very much, I guess, it's organically grown. Whereas I think it's important to sit down with your accountant and talk about what your strategy is going forward to make sure you've got things set up properly. And of course, as I say, we do that compliance side as well, but I think the real value add is that more strategic, looking into property investment. I think it's really important to note that property investment is a business and it should be treated that way.
Yeah, so are you having that conversation and looking at what type of properties they're wanting to do right in the beginning? When people are saying, hey, look, I want to start property investment, or are you finding a lot of people coming to you after they've already started and having to change up things?
Yeah. So we had much more people come to us before they start investing. And the main reason for that is we can get everything lined up before you go into the property game. With the Bright Line test, which was introduced about 5 years ago, but it got updated recently, probably within the last 2 years actually. If you buy and sell a property within 5 years, that's not your family home, then any gain you make or when you sell it is going to be taxable. Essentially it's capital gains tax, but it's called the Bright Line test. The main issue with that is that if you put the property in the wrong entity and you have to transfer it to another entity, that counts as a sale and you could be subject to the Bright Line test. So it's much more important to talk to an accountant up front to work out where you want to buy the property, as in which entity, to make sure you've got it all planned out right from the start. So we see a lot of people come to us maybe 6 months in, and it's very difficult to make much in the way of changes because the Bright Line test could come into effect. So we would certainly stress people should come to us before you're looking to buy your investment property.
Yeah, could be costly.
Could be costly, yeah. No one likes paying tax.
No.
Especially when you don't have to.
Absolutely. That's a really good tip there. How much does it typically cost? Now, it's great. It sounds like you could definitely save people a lot of money, but, putting that money up front, how much would people be looking to pay?
Now, it does vary. I think we certainly see you can get accounts done for it, or tax returns done for as little as $500, but often you get what you pay for. So we have a property package, or rental property package for our clients, which is $100 plus GST per month. That's per entity. In that we will do financial statements, tax returns, and unlimited advice throughout the year if you've got any questions. That could be questions around structuring, I want to buy my next property, I want to sell a property, all of that's covered. And what we've found with that is having unlimited advice throughout the year, people are more likely to come to us with a question or a problem throughout the year, as opposed to coming at the end of it and going, by the way, I've sold this property. If it's going to trigger capital gains tax, the last thing we want to do is have to work through issues after they've happened. Right.
And you have a property investment background, don't you?
So I've been investing for 15 years, and it's one of those things I think the more you do something yourself, the more invested in it you are. I'm also on the executive team for the Wellington Property Investors Association. So yeah, I've been investing for 15 years, and given I'm an active investor, I'm definitely making sure I'm up to play with all the rules and looking to help other property investors maximise the benefits they can get from property investment. Because let's face it, at the moment, you can make more money from property than you will from the banks.
Yes, that's right. And I would guess that really gives you a leg up when you are investing yourself. I'm on a Facebook group, And a lot of people are asking about accountants. And I'm wondering how many people are actually trying to make sure that they know the accountant is actually doing what's right for property investment and not just having general knowledge. Like, how do people find out? You just call up everyone and ask, or is there a certain way that people can find out your property investment accountant or?
Yeah, I think a lot of people would say that they, specialise in property investment as an accountant. From my experience, if you invest in property yourself, you're more likely to be an expert in the field. So questions you'd look for to ask an accountant is, how long have you been investing in property for yourself? And if not, what experience do you have? How many property investor clients do you have? Again, that's important. Often, if you find a good property accountant, a lot of property clients come to them because they get referred by their friends. So if you've got a good portfolio, you're probably good at property investment in terms of accounting. I guess the other thing to ask would just be, what experience have you had dealing with other property investors, and especially around restructuring and looking to, leverage your property advantage. It all comes down to experience. We unfortunately do see a few accountants who are very much compliance accountants. They'll get your tax return done and they'll do the financial statements if you need to, but they're not going to look at that value add I talked about at the start. They're not going to look at structuring. They're not going to look at, have I leveraged my properties in the most effective way? Is my yield good on properties? Do I have a property strategy? That to me is the difference between your $500 a year accountants who are just going to do the bare basics. But for me, that value add, actually helping you maximise your returns on your properties, especially around getting tax efficiencies, that's actually worth paying extra for. That's the value add. It's what I think property investors will benefit from, as opposed to doing a set of accounts and a tax return.
Yeah, it sounds well worth it as well.
I would think so, but I am biased, yeah.
That is true.
Yeah.
So, tips for property investors. What would you say? Let's say somebody's like, okay, I'm going to do this right. Give me all the goods now so I don't make a mistake.
Well, I think we've touched on the first point, and that's come to an accountant early in the piece before you've actually bought your first property if you can. Probably the biggest mistake that I would see people making is having equity in your rental property when you've still got debt against your family home. And the reason for that is any interest on an investment property loan is tax deductible. Any interest on your family home isn't tax deductible. So I'd say the rule number one for being a property investor is pay off your family home as quickly as you can, and make sure you're paying that off before you pay off your property, your investment property. That can be nice and easy to do. You can go on interest only for your investment property and put extra payments into your family home. We do see situations though where someone owns a home for say 5 years, builds up some good equity in their home, then buys another property to live in and then rent out their existing property. The issue there is you've got all this equity in your now investment property. It used to be family home, now it's your investment property. It's really important to put structures in place to shift that equity from your family home, from your investment property into your family home. The banks will usually let you do that. They don't really mind how you structure your properties as long as you're paying back the loans. The ID do mind. If you just shift the loan straight across, it could be deemed to be tax avoidance. So it's really important to talk to your accountant to find the most effective way to shift that equity. Because at the end of the day, if you've got equity in your rental property, then essentially that's probably not the most tax efficient way to be unless your family home loan is paid off.
Wow, I had no clue.
There you go.
That was really good. Yeah. Especially getting into investment property and learning more about that myself. That I'm definitely going to take that one. So thank you so much for your time today. You've given us a lot to think about, and hopefully people will follow through with talking to an accountant first. Get those structures right, get the entities right, and all of everything that you add. So thank you so much, and we will see you again on the next episode of Property Pros.
Thanks everyone. Thank you.
For more financial tips, advice, and education, like, follow, and subscribe.